Hi everyone, it's Nancy Godrad. In this session, we're going to go over Chapter 9, Objective number 3, Disposal of Plant Assets. There are three scenarios when a company has a plant asset. They're going to either sell it at the end of its useful life or sometimes in the middle of useful life when they don't need it. The second one is disposing of it because it's not any more useful or it's at the end of its useful life. We're gonna scrap it or discard it. Maybe even it's damaged and it's not worth fixing it. So that's called the retirement. The next scenario, which is discussed in the appendix and you are not responsible for it, is exchanging the asset for a new one or a different one. So you will not have any homework questions or any question in the exam regarding to Chapter 9 appendix. Now, when we dispose a plant asset, we need to eliminate the asset itself by crediting the asset account and then debiting its accumulated depreciation, basically how much we have depreciated that asset up to the date of disposal. Why do we credit asset and debit accumulated depreciation? Because we need to get rid of the accounts that we will not have anymore when the asset is disposed. The normal balance of an asset is debit. To get rid of it, we're going to credit it. The normal balance of accumulated depreciation, which is a contra asset, is credit. Therefore, to get rid of it, we're going to debit it. Remember, land will not have an accumulated depreciation because we do not depreciate land according to GAAP. Okay, guys, let's go over an example of retirement. So let's say that we have an asset that is it's a printer and it costs $32,000 and its accumulated depreciation is also $32,000 because we have fully used the asset until the end of its useful life, and we are now retiring it because it's not useful anymore. In this case, we're going to debit accumulated depreciation to get rid of it and credit the asset equipment for the $32,000. So this way, the equipment, which normally has a debit balance, by crediting it, we get rid of it, and accumulated depreciation, which normally has a credit balance, by debiting it, we're getting rid of it. Now the question is, what happens if the fully depreciated asset is still useful? If that's the case, we do not prepare this journal entry. We will not depreciate it anymore each year that is useful beyond its useful life, but still we're going to keep the asset in the books. And this journal entry will be prepared once the asset completely is retired and it's not useful anymore. Now, we're going to go over a situation when we are discarding an asset before the end of its useful life because the asset is damaged, it's beyond repair, it's not worth repairing. So in this situation, Sunset Company, in this example, Sunset Company has an asset and that cost of it when they bought it was $18,000. So far it has an accumulated depreciation of $14,000. So the difference between these two numbers is $4,000, the loss that the company has because they weren't able to use this asset anymore. So we're going to debit accumulated depreciation. We're going to have a new account called loss on disposal of the asset. And we're going to credit the equipment for $18,000. The loss is the difference between the cost and accumulated depreciation. Now, what type of account is loss on disposal? It's an expense. It will reduce the revenues. However, because we're not in the process of getting rid of our assets at a loss, basically the asset is not part of the operation. The loss of it will show up in the income statement under the non-operating activities. And one of the non-operating activities is other expenses and losses. Now, if the asset, we dispose of it and it had a gain because we got cash more than its book value, then the gain will also show up in non-operating activities under other revenues and gains. So how do we know if the asset has a gain or loss? We're going to compare how much cash we're getting, the proceeds, and if it's more than the book value, remember the book value is the difference between cost and accumulated depreciation, then we have a gain because we're getting more money than what we have so far in our books as not being depreciated of the value of that asset. Not the market value, but the book value. The market value is the cash we're getting. Now, if the cash we getting, the proceeds, are less than the book value, we have a loss. Let's go over another example. On July 1st, 2017, Wright Company sells office furniture for $16,000 cash. That's the proceeds. So what is happening? It's in the middle of the year. After 6 months of usage in 2017, we're selling the asset. Original cost was $60,000. As of the beginning of 2017, it had an accumulated depreciation of $41,000. Now, the first thing we need to do always, the step one in disposal of an asset, is making sure that the asset has been depreciated up to the date of sale. If you notice in this example, we have not yet recorded the 6 months depreciation in 2017, which they have already given us is $8,000. So the first thing we have to do is debit depreciation expense and credit accumulated depreciation to update the accumulated depreciation up to the date of sale. So now if we add the $41,000, which was accumulated depreciation as of 1/1/2017, plus the $8,000 for 2017, accumulated depreciation as of the date of sale would be $49,000, which we will get rid of by debiting it when we prepare the journal entry for the sale. We got cash of $16,000, and now we're going to compare the cash $16,000 versus the book value of the asset. What is the book value? The cost minus accumulated depreciation, the amount that we weren't able to use in the operation as of the date of the disposal. So since the proceeds are less than the cash, the proceeds are less than, in this case, actually proceeds are more than the book value. I'm sorry. The proceeds, $16,000, is more than the book value, so we're going to have a gain on disposal. The gain on disposal is a revenue, so we're going to credit gain on disposal and also credit the cost of equipment. So we're going to have 2 debits, 2 credits. Now, gain on disposal, as I mentioned, is a non-operating activity, and it will show up under other revenues, under the title of other revenues and gains. So let's go over an example that we have a loss of selling the plant asset, in this case being office furniture. They sell it for $16,000, actually for $9,000, I'm sorry, for $9,000. So the cash that we're getting is $9,000 proceeds. Now, what is the book value? This is the same example. The book value, we are changing the scenario. Instead of selling it for $16,000, we're selling it for $9,000. So the book value is still the cost minus accumulated depreciation. That hasn't changed. Since we're getting less money than the book value, we're going to have a loss. Remember, losses are expenses. So we're going to debit loss on disposal. We're going to debit accumulated depreciation. We're going to debit cash that we receive. We also debit loss on disposal. So 3 debits. And we're going to credit the equipment. Make sure when the journal entry is finished, you add up all the debits. It must include, the sum must include what you're crediting, the cost of the equipment in this case. So now let's go over what happens when we, actually we're finished with objective 3. I can go over one more example. In this case, we have a truck. We have a company, a trucking company that has an old truck. The cost is $30,000. It has accumulated depreciation of $16,000, and they decided to sell it. Now, question number A, scenario number A. What entry would Overland Trucking make to record the sale of the truck for $17,000 cash? We are assuming the accumulated depreciation is up to date. So first, we're going to debit cash that we received, $17,000. We're going to debit accumulated depreciation to get rid of it, which is $16,000. Now, we're going to get rid of the equipment cost, $30,000. Now, let's compare the cash we received, $17,000, versus the book value, which is cost minus accumulated depreciation. So in this case, $14,000 is the book value. The proceeds are larger than the book value by how much? By $3,000. That's a gain on disposal of the plant asset. Now, what if in scenario number 2, they're changing the facts regarding the cash that we receive? So still, we're going to debit cash for $10,000. We're going to debit accumulated depreciation for $6,000 to get rid of it. However, we're going to have a loss. Why? Because remember, the book value is cost minus accumulated depreciation, so $14,000, but we receive only $10,000 cash. So the 14 and 10, the difference is we lost $4,000, and that $4,000 becomes loss on disposal of plant assets. And now we're going to credit the cost of the asset, $30,000. This is the end of objective number 3 of chapter 9. If you guys have any questions, please email.